We're learning that a special forces soldier has been charged for making more than $400,000 by betting on whether or not Venezuelan President Nicolas Maduro would be removed from office.
What if I told you that while missiles were flying, oil prices were surging, and millions of ordinary people worried about another Middle East war? Some traders having access to confidential knowledge were quietly making millions of dollars.
U.S. crude oil costs are pumped up.
Not by building weapons, not by working for defense companies, but simply by betting on what would happen next.
Prediction markets have become a cesspool of insider trading.
Today, we are diving into the shocking world of prediction markets, where people placed huge wagers on whether the United States would strike Iran, whether Iran would retaliate, and even whether key political leaders would remain in power. Let's begin. For decades, investors have tried to profit from wars by buying oil, gold, or defense stocks. But a new industry has emerged: prediction markets. Platforms allow users to buy and sell contracts based on real-world events. Instead of betting on football games, people can speculate on political elections, economic decisions, and increasingly major geopolitical crises. During periods of heightened US-Iran tensions, contracts appeared asking questions like, will the US launch military strikes? Will Iran retaliate? Will oil exceed certain price levels? Or will the diplomatic negotiations succeed? As tensions rose, millions of dollars flowed into these markets. When geopolitical tensions increased, some traders correctly anticipated major developments before they became widely known. Reports identified several accounts that earned hundreds and thousands or even over $1 million from successful prediction market trades tied to the conflict. Some usually well-timed trades prompted public scrutiny and questions about whether all participants had access to the same information.
Had made a number of bets over a series of time.
For most participants, it was simply speculation. For investigators, the timing of some bets raised important questions. Now, imagine a contract asking, will the United States strike Iran before a certain date? If the market believed there was only a 20% chance, the contract might trade for around 20 cents. If you bought thousands of those contracts and the strike occurred before the deadline, each winning contract would settle at $1. That means a trader buying 20 cents could make roughly 80 cents per winning contract before fees. That's why many traders closely followed satellite imagery, diplomatic statements, military movements, shipping data, and breaking news. Oil prices often jump because investors fear supply disruptions. Gold can rise as investors seek safe haven assets. Defense-related companies may attract investors' attention during periods of heightened geopolitical risk. Recent market moves have shown how quickly energy prices and broader markets can react to developments involving the US and Iran. Many professional investors combine these market signals with geopolitical analysis when making investment decisions. Not everyone believes these markets are a good idea. Critics argued that allowing people to profit from wars create ethical concerns. Others worry that if someone had access to confidential information before military actions became public, they could potentially profit unfairly. Because of these concerns, regulators have examined some prediction market platforms, while lawmakers have called for greater oversight of contracts tied to military operations. It is important to note that unusual trading activity does not by itself prove wrongdoing, and investigations into specific cases may or may not establish misconduct. The US-Iran tensions demonstrated how modern financial markets have evolved. Wars no longer affect only governments and armies. They have commodities, stock markets, currencies, and now prediction markets, where people can speculate on future events. For some, these platforms are tools for forecasting. For others, they are simply another form of high-risk speculation. Either way, one thing is clear: when global tensions rise, there will always be people trying to turn uncertainty into profit. So, what do you think? Should people be allowed to bet on a geopolitical event and wars? Or should governments restrict these kinds of prediction markets? Let me know your thoughts in the comments below. If you enjoyed this video, don't forget to like, subscribe and turn on the notification bell. Thanks for watching and I'll see you in the next video.